I started getting consistent in my trading when I started to do this one thing. And that one thing is properly understanding time frame alignment. Because what I used to do in the past is I would see and grab any daily fair value gap and immediately go into the 1 minute and start looking for my entries there. I'd start looking for my 1 minute market structure shift with a fair value gap, and I kept taking loss after loss after loss. You see, you can't go from a daily into a 1 minute. It's just not enough confirmation. There's a certain logic and time frame alignment that you must follow, and that is what this graph is right here. So let's break this down together. From a monthly point of interest, a monthly fair value gap, a monthly order block, a monthly area fair value, any sort of interesting level that you're looking at, you're going to be now going into the daily time frame to confirm that reversal, that price actually wants to move off of that monthly level that you are looking at. And this reversal can come in the form of whatever you want, right? I use an impulse shift, as you guys all know. You can use a change in state of delivery. Whatever you look for as your confirmation, your entry function, you're going to look at that on the daily. Now, same thing goes for the rest of these time frames right here. You're looking for the weekly level, 4-hour entry, daily 1-hour entry, 4-hour, 15-minute, 1-hour 5, and 15-minute 1. Now, keep in mind, these are all just baselines, so you're not just strictly bound to these. So for example, if you see a 4-hour entry function out of the daily, you can still take that. In fact, that's even stronger of a confirmation, a stronger reaction that you're getting a 4-hour level out of the daily. That's still valid to take. Don't skip it because it's not the 1 hour. It's better. Same thing on the 1 hour. If you see a 15-minute instead of a 5-minute entry function, you can still take that. It's stronger. So here's an example of time frame alignment being utilized in order to capture a high probability trade setup. We have been very bullish over here on the daily. We have bullish order flow as evident by the daily fair value gaps right here. We have just retraced into a daily gap and we can move higher off of that. Now, how do we confirm that price actually wants to move higher off of this daily fair value gap right here? Well, this is where we go from the daily time frame into 1 hour. Now here we are on the 1 hour, and all I'm waiting for here is for price to come enter this daily fair value gap in order to start being on the hunt for my entry function. Now for me, that's an impulse shift. If you don't know what that is, comment shift down below. I'll DM that to you ASAP. I made a full video on that. So let's move forward in price and see when that happens. Now here we have that impulse shift in price. We have that fair value gap in followed by a fair value gap out. This is a high probability trade right here. You can enter in that gap. You can put your stop loss at the swing low, which created that gap, and then you can target a static 2R like that. Now, what you can also do here is any 1 hour fair value gap that gets created off of this, you can also take that as a trade and target a static 2R from there. That is also valid. Let's see how this one played out. Here's that 1 hour fair value gap that if we do retrace into, that would be a valid entry. So something like this, also very valid to target a static 2R. Let's say you got tagged out here, and that would have been 2 winning trades right here for plus 4R within that singular daily context.